Brookfield recently had its annual Investor Day and shared a ton of information about the business. If you're a follower of my channel, then you know that Brookfield is the largest position within my portfolio. And after the Investor Day, I have decided to continue buying more. So in today's video, I want to share the highlights from the Investor Day, what my thoughts are on Brookfield now, and why I have continued to buy more. This is probably going to be a very long video, so let's just hop right into it. Alright, so as always, I have put together a little bit of a Daniel Pronk slideshow by taking the screenshots from the Investor Day presentation and sharing them here with you on my channel. So with that being said, let's just start right from the top of the investor presentation. And this slide right here shows Brookfield's long-term share price returns versus other stocks within the market. So we have Amazon, Louis Vuitton, Berkshire Hathaway, Walmart, and the overall S&P 500. So over the past 30 years, Brookfield's corporation stock has compounded at 18% annually. 25 years is 19% and 20 years is 16%. Now Amazon has outperformed Brookfield's corporation, but Brookfield has performed better than Louis Vuitton, Berkshire, Walmart, and the overall S&P 500. And over the past 30 years, the stock has produced a total return of 13,873%. So over the long term, Brookfield has massively outperformed some of these legendary companies in the stock market and massively outperformed the S&P 500. And in the next slide, Brookfield says, but the best should be ahead. We are better positioned now to deliver 15% plus returns over the longer term than ever before. So despite the company's beautiful track record of strong performance, they actually believe that right now the company is better positioned to deliver shareholder value than ever before. Then they show their approach to building and compounding long-term wealth, which they say, number 1, invest in good businesses. Number 2, run the business as well. Number 3, allocate excess free cash flows wisely. Number 4, align everyone with long-term objectives. And number 5, evolve with the world around us. And then Brookfield runs through all of these different key points here. So starting with number 1, they say invest in good businesses. The secret to wealth creation is buying good businesses that can deploy cash at high returns. We try to identify high quality businesses and buy for value. We try to focus on those that continuously deploy capital in a positive way and have resilient earnings and strong recurring cash flows. Now, if you watched my September stocks to buy video, then you know that I did cover the Markle Group, which is basically a smaller Berkshire Hathaway. And in that video, I shared the Markle shareholder letter. And in that letter, Markle also said that the number one way to compound wealth over the long term is to take the cash flow or the profits from a business and be able to continue investing those profits at high returns. If you have a business where it can produce a lot of cash or capital, but it cannot reinvest that capital wisely at high returns, then you as the investor are basically just left with this massive cash pile. So what actually creates a compounding effect is being able to take those profits and invest them into continued growth. And that is exactly what Brookfield is saying in their investor presentation right here as well. Then their next slide says, this has led us to build, buy, and own the backbone of the global economy. The company now has 240,000 operating employees in renewable power and transition, infrastructure, private equity, and real estate. And all of these businesses are supported by large contracted and growing revenues. And the easiest way that I have found to explain Brookfield's business is they are a company that buys and owns the backbone of the global economy. So they really do just invest and own all of the key infrastructure and assets that make our world work. Now moving on to their second key point, which is run the business as well. We focus on operational improvements and expansionary CapEx to drive free cash flow. We try to operate in a cost-disciplined fashion, and we leverage significant operating expertise and teams of professionals. So for those of you who may be new to my channel or new to Brookfield, what the company does is they acquire businesses for pretty attractive prices, and they typically buy or distressed assets or assets that are ridden with debt. And then what they can do is buy these assets, fix them up, and get them operating much more efficiently. And that is how they can drive returns and increased free cash flow. And then once these assets are producing a lot more free cash flow, they either sell off the asset at a much higher price and generate returns that way, or they hold on to it with the plan on holding it for basically ever. So that is kind of how the company operates. Now moving on to the third key point that says allocate capital wisely. Wise cash allocation is the lifeblood of a great business. Our goal is to build new businesses and create global champions with earnings power. We reinvest back into the existing businesses that can compound at 15% plus over the long term, and we opportunistically return capital to shareholders. So Brookfield Corporation, in specific, the BN ticker, is focused on reinvesting the profits back within the business because they do believe that they can generate 15% plus long-term returns on the capital that they do reinvest back into the business. So the BN ticker is more focused on creating long-term wealth creation for its shareholders, and the BAM ticker or the BAM ticker is much more focused on paying out its cash flows as a dividend to its shareholders. And that is the main difference between the BN ticker and the BAM ticker. BN is a lot more focused on long-term capital appreciation, and BAM is focused on paying and growing dividends. Now, while we are on the topic of BAM, the next screenshot discusses BAM, and this says, scale BAM into one of the preeminent asset management franchises in the world over the last 25 years. And 25 years ago, the actual asset management business of Brookfield did not exist. And today, the company has $1 trillion in assets under management. And by 2029, the company is projecting to have $2 trillion of assets under management, which is a compounded annual growth rate of about 17% to their total AUM. So Brookfield Asset Management is a massive business, and it is projecting to double over the next 5 years. Then Brookfield talks about their wealth solutions business, which is basically the insurance business. And they say, grow our wealth solutions business to over 110 billion in 4 years. So about 4 years ago, Brookfield had about $2 billion in their wealth solutions business, and today they now have $110 billion within their insurance assets. And over the next 5 years, they are projecting to nearly triple this business to about $300 billion in insurance assets. They also say that this business will shortly generate $2 billion of profits annually, and we are only getting started. So Brookfield is investing a lot of capital into their insurance business, and it is growing extremely quickly. Now, the fourth key point says, align everyone with long-term objectives. We focus teams on clear mandates. We promote within, and we align long-term compensation. Then their next slide says, alignment is the most important operating objective one can implement. None more so than senior management. We eat our own cooking. 90% of senior management's wealth is concentrated in Brookfield. 20% of BN and BAM are owned by senior management. Our team continues to buy more shares in the company. We are heavily aligned in the objective of creating value in Brookfield over the long term. Now, if you are a long-term viewer of my channel, then you know that I focus heavily on the management teams and the management incentives of these stocks and businesses that I own within my portfolio. The main thing that I look for is for the management of the businesses that I own to have aligned incentives with the public shareholders. And the number one way for this to happen is through high insider ownership. Now, additionally, Brookfield's senior management team has about 90% of their total net worth invested in the Brookfield Corporation. So when I am asking if Brookfield's management has aligned incentives with the public shareholders, the answer is yes. One, because they have the vast majority of their net worth invested in the stock, and also because about 20% of the BN and BAM tickers are owned by insiders. So they have massive incentives to protect and grow shareholder value over the long term, because they are the largest shareholders themselves. And therefore, I am quite confident that they are not going to do anything that destroys their own wealth or shareholder wealth, of which I am one. And this right here is what I love to see and to look for in businesses. And I do think that Brookfield's management team is heavily aligned with shareholders and creating shareholder value. All right, the fifth key point here says, evolve with the world around us. We created our listed affiliates. We added retirement and wealth solutions, and we adapt our asset classes as the backbone of the global economy widens. As the backbone expands, we adapt with it. So a long time ago, Brookfield was mostly focused on owning railroads and ports, hydro and pipelines, and now today Brookfield is focused on owning telecom towers, data centers, solar, batteries and nuclear energy, logistics, housing, and hospitality. Now, this isn't to say that Brookfield no longer owns its railroads, its hydro dams, or its pipelines, because they definitely still do. Brookfield is just saying that they shifted their focus on where they're investing new capital, as they want to invest in the future, because that is where the highest growth and returns are. And on the right-hand side of this slide is where Brookfield is investing its capital today. And I am actually incredibly bullish on data centers, telecom towers, nuclear, and even housing. And I do like this about Brookfield because they are constantly trying to adapt to what the world needs and where the world is going. They don't want to just hunker down and get complacent by just continuing to invest in what works today or in the past. They are future focused. And I do think that this is one of the strong things about this company as well. Now, the next slide says, our business has been very resilient over the past few years, with earnings growth of 17% in the past 12 months. And distributable earnings per share in the trailing 12 months are now sitting at $3.67 US. Despite the chaos of the past 5 years, this period has been the best from a value creation perspective. We have more than doubled our net asset value. So back in 2019, Brookfield was saying that their net asset value per share was $45. In 2024, they believe that their net asset value per share is now $84. And when you included the Brookfield Asset Management spinoff, then Brookfield does believe that its net asset value per share is about $94. And this is a direct comparison versus 2019. So basically in 2019, the net asset value per share was $45, and then they more than doubled to $94 by 2024. Then they continue on to say, our expectation is that our annual cash flow will grow by 20% plus annually on a per share basis over the next 5 years. So Brookfield is maintaining their guidance of over 20% annual free cash flow growth over the next 5 years, generating free cash flow of $47 billion or $30 per share to allocate wisely. So over the next 5 years, Brookfield is projecting to generate $47 billion in cash flow, which is worth about $30 per share of the stock today. This should enable us to deliver annualized returns on invested capital of 16%. So the company's net asset value is about $84 per share today, and they are expecting to compound that at 16% annually, which means that the net asset value per share could be worth about $176 by 2029. But it gets better. Having price trade at value can result in a 29% compounded annual return for you as the investor. So when Brookfield made this slide, the stock was worth about $50 US. They do believe that the true net asset value of the business is about $84 today, and by 2029, they are expecting the net asset value of the business to be about $176 per share. Now, as we discussed, this is a 16% annual return from the $84 net asset value today. However, since the stock trades at a discount to the net asset value of the business today, then it means that if the stock can actually trade for $176 or net asset value by 2029, then the total shareholder returns or the investor returns will be about 29% annually, which is just insane. So if Brookfield can actually compound their net asset value by 16% annually over the next 5 years, and if this market discount can correct itself, then there could be significant shareholder returns over the next 5 years as well. Now, this next slide shows where Brookfield is expecting to generate all of this growth. So 17% of the total growth is going to come from asset management, 28% is going to come from carried interest. Now, the best way to understand carried interest is it's basically just unrealized gains on Brookfield's investments. And over time, they are going to realize these gains, and that is going to turn into real cash flow for the business and for its shareholders. So over the long term, Brookfield is expecting its investments to produce much more returns and become a more meaningful aspect of the overall business. And then as they realize those returns, that will become real cash flow for the investors and for the business. So whenever you see carried interest in Brookfield slides, or if you ever hear Brookfield talk about carried interest, just think about gains on investments. That's the easiest way to think about it. Now, 2% of the company's overall growth is going to come from its operating businesses, 20% will come from capital allocation, and 33% will come from wealth solutions. So this is where the company is expecting its returns and its growth to come from over the next 5 years. Then Brookfield talks about its different businesses and what it expects over the next 5 years. And this one right here is Brookfield Asset Management, or the BAM ticker. And they say, overall, we expect to generate 21% earnings growth annually from our asset management business. Distributable earnings from BAM are projected to be $3.7 billion by 2029. Direct investment growth is projected to be $900 million. Distributable earnings from direct investments are projected to be $600 million. And net realized carried interest to Brookfield Corporation is projected to be about $3.4 billion. So in total, Brookfield Corporation is projecting distributable earnings of $7.7 billion by 2029 from Brookfield Asset Management, which is a 21% compounded annual growth rate. Now for their wealth solutions business, they say, Our wealth solution business has over $110 billion of insurance assets, with a plan to generate $2 billion of distributable earnings in the near term. In just a few years, the business has been able to deliver 20% cash returns on equity, and we are well set up to triple our earnings from this business. The business will continue to deliver high-quality earnings and will contribute growing value to Brookfield Corporation. So the insurance business that Brookfield Corporation started back in, I believe it was like 2019, is now doing $2 billion of annual earnings, and they believe that they can triple the earnings or the cash flow that the insurance business generates over the short to medium term to $6 billion. That is pretty insane. And then Brookfield talks about their real estate portfolio. So they say, which includes the highest quality office, retail, and residential properties globally. Their core real estate portfolio is worth about $15 billion, their transitional and development portfolio is worth about $7 billion, and their residential real estate portfolio is worth about $3 billion. Now, the core real estate portfolio of Brookfield is their highest quality real estate that they plan to hold for the long term. The transitional and development real estate is real estate that Brookfield bought quite cheap. They're fixing it up, and then they do plan on selling it over the longer term as well. And the residential real estate properties are communities that Brookfield builds and then they sell off over time. There's actually a brand new Brookfield community right near my house, and the homes over there are absolutely beautiful. They're all built now, and now Brookfield is selling those homes to regular people. So that is what Brookfield does, is they build new communities and then they sell those homes to people over time. Now, what's interesting to me is that over the next 5 years, Brookfield is actually planning to scale down its real estate portfolio. So today, Brookfield believes that its real estate portfolio is worth about $25 billion. And over the next 5 years, they are planning on selling off $16 billion worth of assets, but they're also going to be reinvesting back into some more real estate. So by the end of 2029, Brookfield is expecting its real estate portfolio to be worth about $15 billion, which is a net reduction of about $10 billion. So Brookfield is going to be selling off a lot of its real estate over the next 5 years, and I think that this is actually a good thing for the business because it's ultimately going to mean that Brookfield is less reliant on real estate and how their real estate portfolio is performing. And if you guys don't know, over the past couple of years, investors were extremely bearish towards Brookfield as a whole because they do own a lot of office real estate. And in my opinion, it seemed like Brookfield's real estate portfolio was really weighing down the stock. So now that they're going to be less reliant on their real estate portfolio and diversify away from real estate by selling off some of their assets, I do actually think that this will be a good thing for the overall business and for the stock over the long term as well. And then Brookfield gets into their summary of the overall presentation where they say, we are set up to deliver 17% annualized growth in distributable earnings per share from our base businesses over the next 5 years, increasing to 25% when you factor in carried interest and capital allocation. So basically, Brookfield is expecting its businesses today to deliver 17% annual growth over the next 5 years. But when you factor in realized carried interest or gains on investments, and Brookfield reinvesting profits back into continued growth, then that is how you get the 25% annual growth to cash flows over the next 5 years. And Brookfield does break it down over the next few slides. So this says, growth in distributable earnings before realizations and capital allocation for the corporation is driven by Brookfield Asset Management, 18% compounded annual growth. Asset management, wealth solutions, and operating businesses and others will provide 28% compounded annual growth, and overall distributable earnings per share from the operating businesses will more than double to about $6.33 by the end of 2029, which is an overall 17% compounded annual growth rate to distributable earnings per share. Then Brookfield says, carried interest will generate $11 billion of cumulative cash flows over the plan period. So when we factor in realized carried interest out to 2029, we can see that it does add a meaningful contribution to the overall cash flow of the business. And by 2029, the company is expecting about $13.5 billion in annual distributable earnings. Then on the next slide, Brookfield shows the reinvestments back into the business, and they say, and reinvestment of excess cash should add $4 billion of cumulative cash flows over the next 5 years. So I outlined right here, this is Brookfield's operating businesses, then the orange is realized carried interest, and then the top part is capital allocation. So if Brookfield can continue to invest profits at high rates of returns by buying new businesses and overall just investing back into the business, plus the realized carried interest, plus the growth to their operating businesses, then that is how we get a 25% compounded annual growth rate to the company's overall cash flows or distributable earnings per share. And by 2029, Brookfield is expecting distributable earnings of $15.6 billion annually, which is more than triple what the company is producing in 2024, which is $5.1 billion. So there are multiple different levers of growth that Brookfield is pulling on, which should deliver massive growth to the business over the next 5 years. So now let's talk about Brookfield Corporation's price today and why I have continued to buy more shares, despite the stock selling for basically all-time highs right now. So Brookfield Corporation's market cap is $72.5 billion today. So if we go to our calculator and go 72.5 billion, and we divide this by the $5.1 billion of distributable earnings or cash flow that the business can generate today, then we get a price to distributable earnings of about 14.2. Now, this is a company that is projecting to grow its cash flows by 20% annually over the next 5 years. So a 14 price multiple for 20% plus annual growth is something that I do not see often in the market. And this company also has an incredible management team and an incredible CEO who is Bruce Flatt, who are also incentivized to continue growing and creating shareholder value because they are the number one owners of the business. And I do think that they want to protect their own net worth and see their net worth continue to grow over the longer term as well. Now, another way to think about Brookfield's valuation today is its market cap is $72 billion. Now, the company also said that it is projected to generate $47 billion in cash flow over the next 5 years. So if we go 47 divided by $72 billion in market cap, then that means that 65% of Brookfield's market cap today will be generated in cash flow over the next 5 years. That is a massive amount of cash generated for the shareholders. Brookfield is then going to use that cash to continue buying back shares, paying dividends, and investing back into the business. And by 2029, it is projecting to generate $15 billion of cash flow in the year of 2029. So if we take the $72 billion market cap today, and we divide it by $15 billion of annual free cash flow by 2029, then that is a forward price to free cash flow of only, which is basically a 5 price to free cash flow on the 2029 projections. This is not factoring in at the $47 billion of cash that should be generated over the next 5 years as well. So every way that I look at Brookfield Corporation, the stock looks incredibly cheap. And this is a business with a long track record of growth, execution, and operating the business effectively. So I'm not sure why the market is so bearish on the stock still, and I'm not sure why the market is not pricing Brookfield for its future estimates. Maybe the estimates are just way too bullish, but if you go through the Brookfield Investor Day presentation that they just did, it's over 100 pages long, but there are slides in there that do show Brookfield's historical projections that they put out in 2019 and how the business has met and exceeded all of their historical projections. So this is also a business that has a history of meeting and beating its own projections. And now they say that they are set up for an even brighter future, and their projections that they're putting out today, they're probably at least going to meet over the next 5 years because, again, they have a history of doing so. So when I look at Brookfield, I see a business with an incredible track record of meeting and beating its expectations, not selling for a high price today, with a long runway for future growth, with a great CEO and management team, and with a management team that also is invested heavily in the stock, is continuing to buy more shares, and has their incentives aligned with shareholders. All of those things make Brookfield look like an absolute slam dunk, at least in my own opinion, over the long term. And that is why Brookfield is the number one position in my portfolio and why I continue to buy more shares. Because I do believe that this stock is undervalued today. And while I believe that it is undervalued, I will continue to buy shares and continue making it a larger position in my portfolio. So as I said, in my opinion, I do believe that Brookfield is a slam dunk from an investment perspective. And that's why I'm just going to continue holding on to it and buying more shares whenever I can. But those are the highlights from Brookfield's Investor Day presentation. This is probably going to be a massive and long video. So if you did enjoy the video and you made it to the end, then please remember to leave a like on it. And if you want to stick around and see more stock market related content like this, then please consider subscribing to my channel as well. But that is going to be all for me for today, everyone. And as always, thank you all so much for tuning in. I truly do appreciate it, and I really hope to see you all again in my next video.